G'day guys and welcome back to another episode of Breaking Down the Charts. Today we are going through quite a bit of information. We're going to be introducing a new coin and going over in a bit more detail two coins that I've been mentioning in previous episodes. These coins are all in the DeFi space and all relate around an FTX launch which is coming out of their own decentralized exchange. Last in the last week, we sold out on our position on Compound Coin. Had a really healthy profit on that one. We entered in at 136 US dollars, and we sold out at $228 for about a 60% gain. So that was really, really good. We're gonna have a look at a closer look at the chart for Compound. I'm not taking a second entry just yet, but I'm definitely keeping my eyes on that coin. It's one of the bigger players in the DeFi space and one of the newer coins. And I do like investing in newer coins when they have larger retracements. There's been a lot of new members come into the Mining Store Discord, which has been awesome. It's growing exponentially. We have a lot of chat lately. It's busier than it's ever been. One of my very close mentors and contacts in the cryptocurrency space, someone who I rely on for a lot of information and intel and deal flow, Original L has come back onto the Discord and starting to give a lot of information about some of these DeFi projects. Just a shout out to L. Thank you very much for that. The community really appreciates it. L's been in traditional finance for years, has a really thorough understanding of money flow, economics, and the level of information he's providing everyone in here is uncountable. So definitely get amongst it. You can talk with these people yourself, along with all the other members that are in there. It's, in my honest opinion, one of the best places to learn about cryptocurrency, and a great place for you to ask questions about projects that you're looking into, and also get great information about projects that you could invest to as well. Okay, so let's go and jump over to the charts. Let's have a look at, first off, we're going to take a look at Bitcoin. So Bitcoin has been rather stable. It had obviously a massive pump coming through around the end of July period, and lately we've kind of just been bouncing up and down. So at about a 30% pump up to this 11,800, but for the past week we've kind of been bouncing between 11,000 and 12,000. So there's not too much going on. It is steadily increasing though. It's definitely not just going completely sideways. As you can see, it's kind of bouncing up. So this 12k period pushing down to the 10,800, 11,000, and pushing back up on a steady increase. So I'm liking what Bitcoin's doing. I mean, if Bitcoin's to push through parabolic, then I think we'll start seeing a bit of money coming out of the alts and people pushing back into to Bitcoin. But at the moment, the alts market, which we're going to go through in more detail, is really kicking off at the moment. There's a lot of really solid projects being released, and people, I'm finding the space is very, very bullish at the moment. What we are looking at here, though, for Bitcoin, just to go over these pitchforks that I like to draw in. I've pulled a pitchfork from the 13th of December up until the high, which was in June on the 23rd, and then back down to the low, obviously, which we had during the COVID lockdowns and the whole world kind of suffering from this pandemic down on the 12th of March. And then that gives us these lines that we can kind of follow and these different trends, this bottom level trend and mid level trends around the regression line, and then these top level trends. Okay. At the moment, we've pushed into that kind of mid tier trend just below the regression line, and we're pushing up and up and up towards that regression line. Now, before I go into more detail on the pitchfork, the other lines that you can see here is the Bitcoin production rate. And this is one of the fundamental factors that actually influences the price and real value of Bitcoin. At the end of the day, what really is determining the value of Bitcoin is also the cost to keep it alive, and that is the production rate. So what miners are paying to earn Bitcoin, all right? So this purple line at the very top is basically to produce one Bitcoin in a year, it's going to cost you, including all the hardware, between, I would say, I don't think it's fully accurate. I actually don't think it's this high. I think it's more around the 14 to 15. And I've done an episode before and explaining why I think that is. But I think it's around the 14 to 15. So to produce one Bitcoin, including the electricity you're going to pay and an aggregated hardware cost, obviously the hardware lasts a bit more than a year, is between 16,000 and potentially between kind of 12,000. Okay. Now, the electricity cost on its own is about 9,500 US dollars. So that's a pretty good measure. In between there, it really depends what price you get the hardware, and I suppose the electrical rate is based off 4 cents as well. Okay, by the way, which is what most big farms, which can contribute most of the network hash rate, are paying for their electricity. Okay, so just to recap that. Bitcoin is currently under what it's costing to produce. Okay, so it's undervalued, fundamentally undervalued. What it's costing more to produce than what the price is right now. So that's why I think we're going to still continue up towards the top of this regression line. Obviously, bear in mind we're just on the other side of the Bitcoin halving, which occurred on this horizontal line here. And previously, Bitcoin was valued higher than the cost to produce. But then obviously when the reward halved around the halvening, that's why we get this bang, and all of a sudden it's heavily undervalued. Okay, so I think we are going to continue climbing up along this midterm trend line in the pitchfork and start getting closer to the 15,000 over the next couple of months. Of course, there are some risk-on factors such as global stock markets. If this pandemic continues going on and businesses are closing down, the economies are suffering, we could see a big pull off in the stock markets. And if that happens, we could see a liquidity crisis just like we saw back in March. And we could see a bit of sell off in these higher risk assets like Bitcoin. So just be aware of those risk on events. But ceteris paribus, keeping all things equal at the moment, I think the Bitcoin is heavily undervalued, and I do think we are going to keep continuing up this trend. I am really starting to notice the caliber of people who are joining Mining Store, or just the caliber of people that are involved in the cryptocurrency and decentralized finance space now is a lot higher. People are a lot more educated. They actually understand, how to secure their wallets, how to interact with the DeFi space, how to buy coins. There's not so much of this activity where people, just giving other people money to do it for them. People are really taking control and using the real benefits of this. So yeah, I really see things moving forward. I'm quite bullish at the moment, particularly on Bitcoin, and that's just a bit of analysis on the Bitcoin production rate and one thing to keep your eyes on. So basically, between the pitchfork and this Bitcoin production rate, that's what I'm following to get an idea, sorry, of where I think Bitcoin is going at the moment. As for Ethereum, as we can see, we absolutely broke out of this kind of longer term or mid-term, short-term trend line that I was tracking. Ethereum's really pushed out through and even broken above this 0.03 line. I mentioned in a previous episode that my target for Ethereum was between here and this zero point 0.4 level. So I think anywhere between there, you can probably look to take some profits off Ethereum, maybe even put it into Bitcoin, which, as I'm saying, I think is probably the most undervalued out of the two at the moment. However, I do think it's more than okay to hold Ethereum still in this level. We are leading into 2.0, where a lot of the supply is going to be locked up and staked. And obviously, with DeFi doing so well, Ethereum is the biggest contributor or the biggest ecosystem for the DeFi space. There's a lot of projects being built on top of Ethereum, and I honestly think it's probably one of the most valuable assets to the cryptocurrency space. It's an integral part to make everything work. So yeah, I really do think that Ethereum is a good one to hold just as much as Bitcoin is. But if you are a trader and you're kind of more on the speculation side and you're not looking for the long-term hold, I do think this area is a pretty good area to take profits. It's going to take a lot to push through this 0.04 level. As you can see here, the market has failed to do that many times. I'm not 100% sure if Ethereum will do that. Potentially, maybe around the time of 2.0 release, when a lot of the supply is starting to get locked up and the tokenomics of this is changing a bit. I think that we could definitely start pushing through that 0.04 level. But right now, I think it's kind of running out of legs. It's outperformed Bitcoin for the whole year now, and I think this is an area to take some profits into Bitcoin if you're on the trading side. Moving on, so that's just Bitcoin against the US dollar. Obviously, similar kind of chart there, but again, really pushing out into those all-time highs almost. So, if we just quickly have a look over here and have a look at some of these key price levels from 2018. This is during the 2018 crash and some key price levels. I think that I would be very surprised if in the next couple of months, let's just have a look at some of these. If Ethereum did push this kind of 500 US dollar mark, I mean, it's definitely possible. Don't get me wrong. I just do think it's going to take a lot of volume and a lot of action for it to do so. Looking at the RSI, we're pushed up to the max kind of level. We are getting a bit of a pull off now, ready to push on again. But yeah, I think it's going to take a lot of volume to really push on past these kind of 450, 500 marks. We did try to do it. We got as high as 445, and then we've had a bit of a pullback. But nevertheless, I'm not saying it's not possible. I just do think it's pretty not overvalued, but it's against Bitcoin in particular. I think it's due to have a bit of a pullback. Okay. Looking on to Digibyte. Now, Digibyte, this is just a perfect textbook material trade. I've been going on this every single breaking down the charts episode. So if anyone missed this trade, I'm not exactly sure how, but nevertheless, that's okay. You can't pick up every single trade. But actually, someone did ask after the breaking down episode, breaking down the charts episode last week in the Discord community. They did ask me in the channels, oh, should I take a position here? And my response to that was really just a classic weighing up the risk versus reward. And I actually put this in straight away and posted it in the Discord. I could probably go and find it, but come and join. You can see that stuff anyway. But basically, right here, I basically said to them, look, if you were to buy here, what we're looking at is to push through this ascending wedge and start taking profits between this 1.618 fib line and the ascending wedge itself. So if you are going to buy here, you probably want to have a stop loss on the bottom of this ascending wedge in case we crash down and crash out the bottom of it. And this is your risk to reward. So a risk to reward of 1.38, you could make up 24% if you pushed up to here, which we're getting very, very close to. But you're also, potentially risking 17% on that trade. Okay. Now, really, we could actually extend this a little bit further now. And this is what we call a trailing stop loss. So now that we've actually pushed through this ascending wedge, I'm a lot more confident that we're going to continue running up. We've broken this kind of midterm high here. And basically, that changes our risk to reward ratio if you did enter that trade. You're actually looking at a 2.44. So you could get 43% gain for only risking 17%. And you could even, bring that up a little bit more now because we've pushed up here. And then you've got a even higher trade. Okay, so you're only risking a much smaller amount. So yeah, really nice trade, really good for the FPGA miners. I've got a lot of miners on mining Digibyte. Myself and Cal, are probably going to look to start taking some profits on those coins that we're mining soon. And the whole community is mining Digibyte. So great to see some big celebrations. A lot of people have been mining since way back here. And that's some huge gains, nearly 3 times as much just from holding those coins on top of the maybe $8 to $10 average that they're earning per day is potentially turned into around $20 to $30 per day. So really, really good stuff. I love big wins for the community, and this is definitely one of them. But as I say, you don't go break taking profits, and look to start reducing some of your exposure, pushing it into things like Bitcoin or Ethereum, which are your more stable, not necessarily stable, but secure places to hold your money. Even US Tether, or into, if you're looking for more speculative options, you can look at some of these DeFi projects, which I'm about to run into in just a second. Moving on from Digibyte and onto Teller, another massive, massive, massive win. Look at that. This is incredible. I must admit I did sell out too early on this one. I posted in the Discord. We're going to go over to the US Teller against US dollar. Teller started having a massive run, and I actually sold out at about $27. I probably should have, in hindsight, put in a stop loss, down around the $25 mark and let this run. But at the end of the day, to be honest, guys, I got in, maybe closer to $4 or $5 a coin. I've been holding ever since. So I was pretty happy securing those profits and rolling it into some of the DeFi projects, which I'm about to talk about. I 4x'd on this one, 433% gains you cannot be unhappy with. But nevertheless, a lot of the guys in the community did hold that, and they actually got an extra 100% on top of what I sold out at. But as I said, more than happy with the profits that I got there, and congratulations to those guys who actually managed to hold on. Strong hands there and sold out closer towards the $50 market. Really good stuff. Don't have too much to comment. I mean, I've already left my concerns with the Teller project. I honestly think the Oracle space, for those who don't know, Teller is an Oracle coin, which basically means it acts as a price feed for smart contracts and other things in the DeFi space. So I think that Teller has a lot of potential, but there's a lot of issues with the centralization on the mining side, and mining store being quite heavily, well, experts in the mining space. I do follow the mining quite a lot, and yeah, I do have some concern about that centralization and how their dispute systems are working. So I sold out on both a fundamental and a technical reason. All the best to this project. I still have my eyes on it. I'm still working with them. I do want them to do very well, but I just had my concerns and I decided to sell out. But nevertheless, if it does come back down to these levels, I may think about taking another entry. But overall, we are going to go into another Oracle coin, which is a newer coin, which I am looking into and investing into at the moment over here called DIA. But before we do that, we'll quickly have a look at Loki. So Loki's holding up really, really nicely. We are just outside of this pitchfork at the bottom level trend line that I've been talking about. But overall, tracking on really nicely, still earning those 23% yields per year. Really happy with the Loki project and what they're doing. I was trying to tee up a time with Simon Harbin to do an interview about their entry into the DeFi space. Unfortunately, we just haven't been able to get a time match up together. But I'll make sure to message him after this episode and see if we can get that episode off and away and get everyone a bit more intel into the Loki project and their entry into the DeFi space. Not much more to comment here other than, probably 5 or 6 more people have messaged me to set up Loki nodes, which has been awesome. I think this is a really good one to have in your portfolio eventually, guys. Once you've got the amount of miners that you want to have for that passive source of new crypto flow into your portfolio, along with a bit of exposure to Bitcoin, Ethereum, Loki is definitely one of those projects that I think is worth having exposure to and getting that 23% yield per year as it currently stands. DIA. Now let's have a look at this new coin that I have invested into. This is on the back of a recommendation through through the official L, which is one of the people that I rely on for a lot of intel in the cryptocurrency space. And I'm going to run through just a couple of things that I have found out about this project and why I'm investing into it. Again, guys, as I mentioned, this is a Oracle project. They are basically providing data feeds to the cryptocurrency space for the decentralized finance area, price feeds on things like Bitcoin, Ethereum's prices. If you're in a smart contract with someone, you heavily rely on the right prices being quoted, whether it's for a loan or for interest payments. And these Oracle projects are essential in the DeFi space. So do your own research. Go and check it out. Follow it through the website like I just did. If you scroll down, you can read all of these documents. They're actually quite short and sharp, about 6 minutes each, and start to understand the project a little bit better. One of the things that I want to go into is they've just done their kind of bond releasement, like their token release, and basically the way that they've done it is they started it off. They've done it on this kind of increasing price curve. So at first, people could buy the coins for as low as 5 cents, but obviously there's not that many coins available at that price, and as the amount of coins being released, there's 20 million total, sorry, 30 million total being released. As the coins are released and continue to be released, the price goes up for those tokens. Okay, this place here, June Analytics, is a really good place, a really nice dashboard to follow that. So as you can see, 10,000 tokens of the 30,000 have been released, and there's still 20,000 more to be released. The auction closes off tomorrow. Okay, now that's really important because as you can see, there's 20,000 tokens here that haven't been sold. And what happens to those tokens if they don't get sold? They get burnt. And what happens if they get burnt? The total amount of supply that can exist for this token is reduced. Okay. Now, pretty sure in this photo here, token allocation, as you can see, there's 30 million that was allocated to this bond yield. Only 10 million of those have been sold, and as it currently stands, that means 20 million of those are going to be burnt. The ecosystem token pool, I won't go into too much detail, but that's like a way you can earn interest if you lock up your tokens. There was $25 million, 25 million coins allocated to that. The team has tokens, obviously. They have a vested interest in making this do better, and they have tokens to both spend on the project and also like to reward themselves. There's 24 million tokens there. Existing backers, association reserve, and private sale totaling to 200 million. So if 20 million of these tokens get burnt, that's 10% of the whole market supply that's being burnt straight away. That's obviously going to have some effects on price. Lower supply, generally means higher price. Okay. So yeah, that's just one thing, just about just understanding the tokenomics a little bit more of this project. One reason why I quite like it, on top of that, it's not just the tokenomics I like about this coin, but I also really like, that they're in the Oracle space and what they're trying to achieve here. As I said, the two major Oracle coins, Chainlink and TRB, they both have inherent issues that I'm not overly happy with. But this project really seems to be taking things from a nice decentralized approach. They seem to have a really good team on board. I joined their Telegram channel. Everything kind of seems to tick boxes. And of course, it's a new investment. The market cap is a lot smaller at the moment, which means there's potential for a lot more gains. If this project does catch on. With that, obviously, there's more risk, but nevertheless, that's what trading's about: risk and reward. And I often make the most my highest returns in earlier investment coins. Okay. Um, so that's probably enough. The only last thing I'll mention about DIA is you can lock up your tokens for up to 12 months. So 3 months, 6 months, and 12 months. If you were to buy before the 18th, you can actually get an extra bonus interest on locking it up of 10% if you lock it up for 12 months. So that's 32% you can earn for the year. Something to worth consider. You could lock up any amount. You could lock up one DIA token, which is worth about $2.50 at the moment, was it? Or $2.80, $2.88 at the moment. You could look up one token and earn 32% interest on it. If you wanted to, you could look up 10, and then you'd get obviously around 13 tokens back at the end of the vesting period. So it's something to consider. I'm not encouraging this. I don't encourage locking up at the start of early projects that haven't proven themselves. 12 months is a long time in the cryptocurrency space. However, I do think it's a really interesting thing, and there are a lot of people following this DIA interest program. Okay, the interest rates that are available on the market at the moment are quite low, obviously, at banks. This is a lot higher risk than a bank, but nevertheless, there are opportunities out there like this. Okay. Moving on to Aleph, DIA, and this other coin, Serum, which I have here, all kind of relate to each other in a way. I'll go into that in more detail, but we'll go through on Aleph a little bit more. Aleph should have a bit of an announcement coming out with their partnership with Serum. I posted an article in the Discord which outlined this partnership. But ultimately, for those of you that don't know what Serum is, it's FTX's, which is the largest margin trading platform available at the moment. It's their decentralized exchange token. Okay. Now, decentralized exchanges, I really think, are going to start taking off and start getting a lot of action, volume going through them, as opposed to centralized exchanges. I've been interacting with it when I bought this DIA token. I actually really, really like it, to be honest. I haven't really used decentralized exchanges too much. And for those of you that don't know, a decentralized exchange basically means you don't deposit your tokens onto the exchange so much. You use something like a MetaMask wallet, which is a Google extension up here, and basically you connect that MetaMask wallet to the liquidity pools, and then you just trade directly into the liquidity pool and then back into your decentralized exchange wallet. Okay, so you're not depositing the tokens on there. You're not giving away, your private keys or anything like that. You still own the assets. It's a potentially a much more secure way of going about trading, or at least you have a lot more control over your funds by going about it through decentralized exchange. So again, this Aleph coin, looks like they're going to be helping to support the Serum project, the decentralized exchange on FTX. And for those of you that don't know who FTX is, have a look into them. They're massive. I really think that this project, both Serum and Aleph, are going to go really well. So these two kind of tie together, and DIA kind of fits in because they're for decentralized exchanges to operate successfully. They need to have reliable Oracle coins or price feeds coming into their exchange, so people are getting accurate price measures. Okay, so that's pretty much all I want to say for Serum and DA. There's some key dates to be aware of. The 18th, tomorrow, that's when the DIA bond yield ends. And there's some dates coming up for Aleph as well, which I'll announce in the next Breaking Down the Charts episode, as well as Serum. So stay posted for these as well. Okay. Moving on to Compound, as I said previously in the Discord, that we did actually sell out our position, which is I think we did really well on, to be honest. We picked the market at $136, sold at $228 for 60% gain. So we picked it in just here when it broke out of this cross, we bought in, and then we sold out just up here on the 228, and it's come back down to 194. So I'm going to let this play out for a little bit longer. Not interested in buying in just yet. I do like Compound. I personally actually I've been limited for time, and I need to do a bit more research on the project itself. But it's got a lot of buzz factor to it. A lot of people are interested in this project. It's a really cool concept of earning compound interest in the DeFi space. So definitely worth keeping your eyes on this coin. I'll definitely be tracking it a lot further at a later date. But for the moment, basically that was just a trading play. Okay, I'll let you know if I take another position in the Discord. For those of you who are not in the Discord yet, I strongly, strongly, strongly recommend that you take advantage of the 7 day free trial in the YouTube description channel. Come and meet everyone, guys. There's a phenomenal amount of information going through here. If you're stuck out there, kind of not really feeling confident in what exchanges to use and how to set up your wallets and which projects to invest in and how to find information, I really recommend you come and join here, guys. I'm really proud of the Mining Store Discord, to be honest. I've met some incredible people along the way. It's just growing and growing and growing every single day. Scrolling through on the right here, these are all of our members. A lot of them are offline at the moment, but even at the moment, there's probably over 100 people online sharing ideas and sharing information with each other and helping each other out. So yeah, can't recommend it more. I might be pumping up my jets here, but I do think it's one of the best places to get involved with the cryptocurrency market. And you've got a 7 day free trial there to prove it to yourself as well. Okay. Now, other than that, guys, only two projects left here is Handshake and CKB. Less relevant for traders, but for our miners out there, these are coins that we mined on our FPGA units a long time ago, maybe six or 8 months ago, and they're starting to show a lot of love. We've been holding them since about back here. They've kind of bled out a little bit, but they've been shown a lot of love, and some people are cashing out their positions now. So if you're still holding any of these, just make sure you maybe potentially, it's up to you. You could hold these for the long term and just see what happens. But I do think, based on previous price action, these are kind of fair values to start taking some profits. But as we learnt from the teller trade, don't take all of them because this kind of action can happen. Massive wins lately, guys. Digitite, Teller, some new projects, DIA, Aleph and Serum that we've invested into. If you're struggling to keep up with all this, as I say, best place to do that is in the Mining Store Discord, where you can take notes. We have channels to categorize these things so you don't miss anything, so they don't get missing, caught up in a lot of conversation. Any trades that I do, I post out here throughout the week, and obviously post my breaking down the charts episodes. Look forward to meeting new people, guys. Stay safe out there. Things are getting pretty crazy. Nevertheless, there are a lot of opportunities there, and I do feel like we're at the start of a market cycle. Pretty bullish on the market at the moment. Obviously aware of the risk on factors, but nevertheless, lots of opportunities to be made. Take care, guys. All the best. I'll see you next week.